This morning on BRN Finance, Jane's crystal ball, a look at markets and the economy in 2025. Joining me now is Jane King, financial journalist, joining us from the New York Stock Exchange. Jane, so great to see you. Happy New Year. Thanks for joining us this morning.
Thanks. Yeah, I'm at the New York Stock Exchange. So actually on the trading floor, you can see the traders walking by.
That's pretty
And
cool. That's
it
pretty
is
cool.
very cool. I worked here for 13 years. And so I'm back now. And it's old friends and new friends. And it's great. And there's nothing that beats the energy of the trading floor. So it's awesome to be back.
Well, Jane, we're always pleased to have you, and thanks so much for making time out of your incredibly busy schedule. I think a lot of people don't know you get up extremely early, even earlier than I do, to do your shows.
Yeah, no, I'm gonna stop doing this at some point. Like I'm getting up like in the middle of the night and coming in and doing this, but
You
the
enjoy
kids
it. Look, you enjoy
kids
it, and
need
you're good at it.
shoes and food, so I got to keep working.
There you go. Okay, Jane, let's talk about 2025. We have a new Congress that was sworn in yesterday. Let's talk about the markets, though. What can we expect or look towards in 2025 in terms of tea leaves, branches, et cetera, that we need to keep an eye on?
Yeah, well, the market expects easier mergers and acquisitions. There wasn't a whole lot of that happening in the Biden administration. I flew Spirit Airlines, by the way, coming back from Indiana, and I was like, I wonder if they'll try again with JetBlue. I think they might under a friendlier administration. So I think we can look for more of that. Crypto is going to be interesting to watch. There's a whole new group coming in, and they're all crypto friendly, from the Treasury Secretary to the SEC Chairman. So it's a totally different attitude involving crypto, but a lot of that's already in the market. So I don't
Mhm.
know if this is going to be a, buy the rumor, sell the fact kind of thing when we actually see it happen. We've still got inflation lingering around, and we just got consumer price, numbers last week or week before, and they're still showing inflation. And so we may see the Fed not aggressively cutting interest rates. So all of those things are going to be things we're going to watch in the first quarter.
Yeah, yeah, and let's talk about you mentioned a lot of different concepts. Let's talk about gross domestic product. That's something that I think a lot of people will be watching because that is a gauge. It's not the only gauge, but is a gauge of the growth of the economy. New administration coming in on the 20th. We've got a new Congress. What could we be looking at in terms of the growth of our productivity as a nation?
Well, we could see, I mean, we've been seeing GDP around 2 to 3% for a while. My guess is it'll probably stay around that level. There could be tariffs that are coming in
Mhm.
that would possibly curb spending, would keep the GDP under, keep a lid on the GDP for some extent. So, I don't expect gangbuster growth next year. I still think, it's going to be okay. And there's going to be some changes for sure. But I still think we've got some kind of macro challenges in the economy.
You mentioned mergers and acquisitions. Let's talk a little bit about job creation, job growth. I think, there's a lot of, look, I'm just going to put it this way. There were a lot of revisions to the Bureau of Labor Statistics numbers last year, but what could, and they were actually, when they were revised down. They weren't revised up. So private sector growth, maybe flat. I'm being very generous there. What could we possibly expect with job creation, job growth, and ultimately wage growth in 2025?
Well, I think if you see regulations be lightened, that could be helpful for job growth, particularly in the energy sector. Those energy companies, if they're allowed to expand, if they're allowed to, permits start coming more frequently than they have been. I mean, that could be good for job growth. So we'll definitely keep an eye on the energy sector. But it might be kind of a wash because there may be some mergers and acquisitions that would have happened that didn't, and sometimes those result in job losses. So, we'll just see. I think some of the big transformational things that'll happen under the Trump administration may take a little longer, like this Doge thing. I mean, that's almost like a generational change, kind of, and that's going to be difficult to get that done. Even though I think, Elon Musk and Vivek Ramaswamy are great and smart and determined for it to happen. I think it's going to be difficult. These are things people are used to. and it's going to be very hard to get them off of those. So, I'm watching like short term, but also long term, and whether some of these things will be good for future generations.
Yeah, I'll just mention that 40 years ago, Ronald Reagan came in the 1980s, said he was going to kind of do the same thing, and he was able to curtail the growth of government, but not actually shrink it. So hopefully, the Doge, if you will, might have an opportunity to be a little bit more successful, and it seems like they've got some bipartisan support. Jane, there's a lot of conflict, a lot of war. That's not good for anybody, certainly not good for the people in which are embedded there and inflicted with it. What could that possibly, if we can see that kind of go away, what could that mean for facilitating global trade and ultimately what winds up in our back pockets in terms of dollars and cents?
Right. Well, all these conflicts are not helpful. We've seen the market do well, even with them going on, but they're not helpful. It's like in spite of those conflicts rather than because of them. So if we could see Trump come in with some kind of like, I felt like both Russia and Ukraine and Israel, that the Biden administration was kind of wishy-washy on things. And especially with Ukraine.
You're being very
Yeah.
generous there.
Especially with Ukraine, it was like they give them just enough to keep fighting, but not enough to win. And I think, there's these conflicts are going to be more decisive in terms of getting them done. And it may not be pretty, but I think that, what we've been through is certainly not. So I think that, that is going to help get these behind us, get a leader of the US that, can draw these things to a conclusion. And I think that can only be helpful for the market.
Jane, you mentioned job growth. We talked about job growth. We talked about being more productive. We talked about mergers and acquisitions. Where does AI fall into this? Is that still trending at this steep pace? You talked about NVIDIA last year. You talked about Apple, X, et cetera, with Prime, or Amazon, all getting into and implementing artificial intelligence solutions. So would we expect that growth to still be at this very steep level, or will it kind of level off?
Well, if you look at 2024, NVIDIA added 2.2 trillion to its market cap this year. I mean, it was by far the company that added the most market cap. Apple is close to $4 trillion, right around there. And AI-driven smartphones, one of the main reasons why they think that will happen. So it's definitely still going to be a theme. Palantir has done really well this year. It's up 370%, I think. So all these AI-related companies have had a great year this year. I expect that to continue at least for the first quarter, and then we'll see that kind of runs out, or if there's some kind of change in theme or a direction that might make a difference. But AI is, I think, here to stay, and it's a longer term theme for the markets.
Yeah, and okay, let's close on, you mentioned the Fed. Is a January rate cut out? And do we just see, based on the inflation, the job numbers, the economic growth, do we see less cuts, more cuts, raises? What do you think?
Well, the market is expecting 2 cuts next year now, so that's down. That is different than, what we were expecting 6 months ago. And that's part of the reason why we saw the market so rocky since mid-December. I would expect no rate cut in January, and then they'll continue to watch the economic data and see if it heads in the direction. So I think that's what the traders expect, and it's probably what we'll get, at least so far.
Yeah, very excited for you, Jane, to be back at the New York Stock Exchange. And now you'll have access to all those traders. You're right there in the thick of things. I'm real excited for you. Jane King, always great to see you. Thanks for joining us. And we look forward to having you back on the program again very soon.
Thank you.
And don't forget to subscribe to our daily newsletter, The Morning Pulse, for all the news in one place. Details, of course, at our website. And we're back again tomorrow for another edition of BRN. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.